And traders at Access Bank say they expect a slight sell-off from auction winnings today as stakeholders fund for the bond auction debit and retail auction. Dayo Ogundare, team member of the Treasury Coverage at Access Bank, joins us now to give us some perspective on the fixed income markets. Dayo, thank you so much for your time. So if you can just speak to the biggest takeaways from that bond auction result and how you see things playing out over the next week.
Okay, thanks. So it was short, given the public holiday, it was a short trading week. And as we anticipated, the bond auction was oversubscribed. We saw rates come down marginally across all the bonds that were on offer. And given in the market yesterday, there wasn't a lot of activity. We saw some slight demand around the on the run bonds, with emphasis on the 2036 and 2050 papers. But offers were maintained around the 12.9% and 13.15% handle, respectively. So the market just remained quiet for most of the trading session, and we just saw about a 5 basis points drop across the curve. So for the outlook, we expect some slight sell-off for the auction winnings tomorrow, and as counterparties from the bond auction for today and the retail SMIS as well.
Well, looking further ahead, what are your expectations for the MPC meeting next week, and what impact would that have on trading activity next week?
Okay, going into next week, yeah, that's correct. We have another PMA auction with about 216 billion on offer. We've seen the rates on the 1 year close lower in the last auction. And given the excess naira from the last NTB auction and the bond auction that was on Monday, when you add that to the need for the federal government to minimize their borrowing costs, there's a strong possibility that those rates on the 1 year will come down again. So going into next week, we just expect traders to be cautious, opening the week leading up to Wednesday, with market participants just searching for profitable deals.
What are you looking at in terms of potential policy action from the MPC?
Well, we've seen inflation come down this month. I think we don't expect we expect all the parameters to be held, just given where the fragility of the economy as well. So with that, I don't see any significant changes by the MPC.
All right.
I think where they are, where all the parameters are, that's where they want it to be.
All right. That's well noted. A quick view on the Forex markets. I see that the FX reserves have grown ever so slightly, but they are still somewhere around $33 billion. Many have said to me in the past that when the reserves fall to somewhere closer to 30 billion, I think there could be more concerns about the outlook for the currency, and we could see even further weakness. Do you share those concerns?
I think with where the reserves are now, there's still some buffer from that 30 billion mark you just mentioned. With oil prices being where they are, that should also trickle into the earnings that the federal government will earn over the next couple of months. So I think around this level is still okay. Like you mentioned, anything 30s should be some cause for concern.